Welcome to the committee's second evidence session in our inquiry into leasehold reform. Thank you very much for coming. I'll just ask committee members to put on record any particular interest they may have that may be relevant to this inquiry. I'm a Vice President of the Local Government Association. Perhaps just go around the table. That's
my register of interests. I employ a councillor in my office. I employ a councillor in my office. I'm a Vice President of the Local Government Association and a Leasehold.
Councillor as per Register of Members' Interests.
I'm a Vice President of the Local Government Association.
I employ a councillor in my office and also have connections with the industry that are fully declared in the Register of Members' Interests.
Own a property which is subject to leasehold.
I'm Vice President of the LGA.
I'm a Fellow of the Royal Institution of Chartered Surveyors.
right. Okay, thank you very much for coming to give evidence to the committee this afternoon. Could we just ask you to go just down the table and say who you are and the organisation you're representing today?
I am Jenkinson from Persimmon Homes.
Jason Honeyman, CEO of Bellway Homes. We build around 10,000 homes per annum across the country.
I'm Jennie Daly. I'm the Group Operations Director of Wimpey. I sit as an Executive Board Member and also a member of Wimpey plc.
Okay, thank you for coming to the committee this afternoon. Just the first question. You, as companies, all sell leasehold properties, and I think many of them will have clauses in the contracts about escalating ground rents. How do you justify those clauses?
Do you want me to kick off?
Yes, please.
What the problem is, I suppose, there's no real definition what an onerous ground rent is. If you look at it and you look at the definitions, there's not really there any definition of what onerous is or a definition of what new build is. That's led to a bit of confusion around the numbers, and it's led a bit of confusion around the scale of the problem. And that confusion has led a little bit of confusion to the customer. Personally, my own view of what an onerous ground rent would be is the one which materially affects the customer's ability to sell or to dispose of their home. Personally, I'm not aware of any Persimmon leases where that's the case, so I'm not really sure where the definition comes from.
Can I just add to that, Chair? As Bellway, we don't have any onerous leases. Our standard lease is based upon a rent review based on RPI, which is acceptable to all the main lenders, so we haven't got any complaints with regard to onerous leases. I think this, I'd sort of echo what Dave has said. Where a ground rent value becomes disproportionate to the value of the home, I think that's where you capture an onerous or a defective lease.
Right, but why an escalation at all? Because you're not doing more for collecting more money, are you?
Well, I think the purpose of an RPI increase is an indice that's acceptable to the lenders, and the purpose, as I understand it, is to ensure that the ground rent at the time of purchase is the same in real terms at some point in the future. That's the idea.
But why? You're not doing more for it?
No, but it's just an indice that's acceptable to the lenders.
Yeah.
So
is it acceptable to the person who's buying the property? That's surely the test.
It's a good question. I think the purpose is simply to design that the value at the point of sale is in real terms the same value in 25 years' time. That's the idea.
Really,
and it's been
question,
common.
But maybe go back what more you're doing to actually bring more money in. But anyway, perhaps we'll have an answer now.
Yeah. Thank you, Chair. Firstly, I welcome the opportunity to appear before the committee today, both to repeat our apology to those customers who have been affected by a very specific lease that Wimpey had historically, which was a 10-year doubling ground rent lease, and also if I have the opportunity to explain the measures that Wimpey have taken to date and are taking to help resolve that issue for our customers.
We'll come back to the compensation scheme
yes.
in due course. Right.
In respect of the of ground rent and just picking up on the matters of RPI, the expectation is that that's merely to an RPI index is merely to reflect the progressive value of money.
Right, not necessarily the value of what you do. But anyway, that's nobody's managed to explain that quite yet. Right, so I go into one of your sales room and I buy a property freehold as opposed to leasehold. Do I get charged more for that property if it's freehold?
If I can answer that, I think it's important to differentiate between houses and apartments. And,
right, well, let's start on houses then, because there is clearly properties are sold both freehold and leasehold of a similar nature.
Yeah. So the expectation would be that a customer would pay more for a freehold property than a leasehold property.
Right. So a customer comes into your showrooms and wants to buy a property. You offer them two different prices, do you, for freehold and leasehold?
Well, we no longer sell houses.
Well, you did in the past, did you?
We did in the past, and a property would have been offered leasehold, and there would have been potentially a separate premium for the freehold.
Okay. And,
can I give you an example of that? Yes. I mean, we're the same as Taylor Wimpey in that regard. So if you was in Newcastle, there are only certain areas in the country that seem to have leasehold homes, predominantly in the northwest and some parts of the northeast, and obviously in very central parts of central London. But if you was to come into a home in Newcastle, say, and you wanted to buy a home for around 1,000 square feet, you could buy that £196,000 on a leasehold basis, and if you wanted to acquire the freehold, it would cost you around £200,000.
And that's
the sort of difference.
That could be done at the same time. You could go in and choose, could you, which sort of arrangement you had?
Not today, but you could in 2016 when we were selling leasehold
and
houses.
That was clearly advertised to anyone coming in to buy a property from you, was it?
Our group instructions to all our sales offices are to offer either leasehold or freehold.
Right.
That wasn't the case at Persimmon. What we would do was once we decided the site was going to be leasehold, the site would be sold leasehold, and it'd all have a lease. Right. If we sold the house was going to be freehold, the only exception to that rule would be if it was an apartment, and an apartment would have a ground rent to do with the management of the building. But the houses would
Sorry,
be
just to come
sold
again, so you didn't sell properties leasehold and freehold on the same site? Then?
Not houses, which was your specific question. If you want to ask, did we ever have sites where we sold apartments? And houses?
No, I'm talking about houses now.
Houses, we didn't have that, no.
So you just sold them leasehold?
Yes, the only exception to that came a little bit later when we decided to stop selling freehold.
Stop selling leasehold?
Leasehold, sorry, yes.
Yes.
Yeah.
Okay, so you just had leasehold sales?
Yes.
Full stop?
Yeah.
Okay. So when you've changed now to just sell freehold, and that means you've increased the price of those properties, have you, accordingly?
We did, depending upon prevailing market conditions. What we did, if we had a large site, for example, we'd come for a logical area where we'd finish selling leaseholds, and the balance of the site was sold as freehold houses. We looked at the price at that time and increased the price of them freehold units by about £2,000 to £3,000 per unit, and the leasehold ones we didn't sell anymore on that site.
So what calculations do you all do about the difference between freehold and leasehold when you're selling? What's the percentage difference, the percentage uplift of the freehold property, and how do you calculate it?
It does vary. Sorry, Jennie. It does vary, but typically it would be 20 times the annual ground rent. That would be a typical calculation we would do in valuing the freehold.
Right.
When we converted to freehold, and I would explain that we really only sold leasehold properties in the northwest of England, where it was established custom and practice to sell on a leasehold basis. Then we set a premium that was roughly around the 20 times £5,900 that Jason has referred to. And when we made that change, then for freehold, the property prices were increased.
Very simple.
Right. So if anyone wants to come along and buy the freehold from you, then all they have to do is pay 20 times the ground rent. Is that right?
Well, we'll talk about what we've done later, but that's similar, and we've got a policy along those lines.
Any freehold that Taylor Wimpey retained, particularly when we were transitioning from leasehold to freehold, we made a commitment to those customers that we would hold that freehold for a period of no less than 5 years, and that it would be available for them to buy at a specific price.
So 20 times ground rent would be what you'd offer with if someone came to you to buy their freehold?
we've got a company policy on that. We're not going to talk about that now, what we've done to help the customers, or whether you want to talk about it later. I'm quite happy to answer the question at any time.
Well, we can look at the compensation issue, but I'm just saying, if you've done the calculation about the difference in price...
Our policy that we introduced, it would be the lesser of the market value of the ground rent, or 25 times the multiple.
25 times?
Or the market value, the lesser of the two. So if it was to come in at 15, they would get it for 15. If it was to come in at 10, they would get it at 10. We knew we capped that figure, and it's actually in the leases at 25 times.
And we set a specific price.
What we still haven't had, though, is an explanation of what you collect ground rent for. What do you actually give to the householder, in return for this money you're taking from them?
I think in respect of leasehold houses, I think that's a fair question, and it is one of the reasons that when these matters came to our attention at the sort of autumn 2016, we made the very quick decision to convert the homes that we sell to freehold.
So you don't
in
think
the
you would give me
Northwest.
anything then, basically?
But we believe that they're unnecessary for leasehold houses in the majority of circumstances.
Right. So you were embarrassed into abandoning them then, because you didn't justify them?
As I said, Chair, it was established custom and practice, particularly in the northwest of England. We did it to remain competitive. When the matter was brought to our attention, it was something that we were uncomfortable with, and we made that quick decision because we believed it was unnecessary in the case of houses.
So Taylor Wimpey haven't got any reason to collect the ground rent they can't justify. What about Bellway?
Well, the only tangible benefit is to buy a home at a lower price from the outset. There is no other benefit, Chair. So it's just how I described the price differential at the beginning.
Yeah.
And that's the only tangible benefit I can offer.
Yeah. See, we had witnesses from Persimmon who came to talk to us who said, well, we bought the property leasehold, they wouldn't sell it any other way, but then when they sold the freehold properties on the next phase, because they changed the policy, the prices weren't any different.
I don't know which site that actually was. I could guess which one it possibly is. That's not.
Well, quite a few people complained about it.
That's not. Well, I imagine it was Harbour, was it?
No, I think it was actually the northern side.
Was it? Well, that's not the company policy. I can assure you that the company policy could not have been clearer. When we stopped building on a particular phase, that the instruction went out that they would increase the price on the balance of the site.
Teresa?
Where you sold houses, new build houses as leasehold, was that under the Help to Buy scheme?
I've looked at our records, and in respect of leasehold houses, and I would repeat that for Taylor Wimpey that was predominantly in the northwest of England, we had about 2.7% of our leasehold houses were sold under Help to Buy.
What about?
Yeah, if I could give you sort of in context, in thousands really. So we wouldn't differentiate for a buyer whether you're buying cash or whether you're Help to Buy.
But the Help to Buy scheme, you had to be an approved developer to be under the Help to Buy scheme.
Yes.
So
for sure.
Would they have been Help to Buy properties you sold?
Yeah. All properties would be Help to Buy that are categorised or fit within the criteria. So I would guess we sold around 4,000 homes across a 5 or 6 year period on leasehold, and I would is a best guess, because looking at the shape of the business, that around a third of those would have been on a Help to Buy basis.
Okay, thank you for that, Persimmon.
Just so you understand, when we were developing a site, once we decided it was going to be a leasehold site, we didn't distinguish between Help to Buy or any normal form of sale, whether it was a mortgage without Help to Buy or whether it was a cash purchaser for that matter. So wherever it was a leasehold purchase, then when a customer used Help to Buy, then it would be a Help to Buy sale to the leasehold. Yes.
Thank you. Thanks.
Kevin?
I accept that it's kind of custom and practice in the northwest to have leasehold properties, but one of the problems seems to be the level of the charge. Can you just say what you were charging typically on a leasehold house, say before you changed your practices? What were you charging typically?
So just for
what was the annual ground rent?
The ground rent would have varied.
Just typically?
Somewhere between 150 and 290 pounds.
So say this average of 200 or something, 250.
Yeah, we I always say around £200 is the passing ground rent. Yes.
Very similar. Yes.
And what would it have been 10 years ago, that figure?
It was broadly similar.
£200. £200 a year 10 years ago. 20 years ago?
I'm unaware of what the
I'd be
level
guessing
is.
if I...
Could you let us know? Could you write to us and let us know what you were charging, say, 20 years ago? Because it seems, is it not the case in your own view that the level of the ground rent seems to have gone way... I've been dealing with ground rent with leasehold properties for many years in my life prior to entering Parliament, and the ground rent used to be pretty much peppercorn. Yet they seem to have recent years just gone through the roof, and the only explanation you can see around that, because as the Chair said, there's no tangible work that goes on, especially for a leasehold house. It just seems like a kind of a side door into a profit opportunity. Is that a fair reflection of where we've been?
As I say, in respect of leasehold houses, we have taken the decision that it's unnecessary.
Do you feel, is it fair to say that the level of ground rent increased well beyond the level that was fair?
As I've indicated, I think that it was broadly similar 10 years ago, and I'm only able to comment 20 years ago, but we'll take away your question and reply.
I'm certainly not aware of any sort of step-changing ground rent in the past 10 years, but again, I'll look into it and see if we can see some correlation over the past decade or two.
2 decades would be great, yes.
It's a valid question. I'll come back to you as well.
Thank you very much. Thank you. Mary.
Thank you. We heard evidence that up to 80% of new homes in the northwest were being built and sold with leaseholds attached to them. We seem to be thinking that it's custom and practice. It's always been done that way. Given where we are now inquiring into it and some of the changes that have been made by Taylor Wimpey, is it still an appropriate model?
Well, personally, I don't think there's anything wrong with a leasehold tenure. It's been used for a very long time, providing you've got a fully marketable lease. So personally, I don't think there's anything wrong with a leasehold tenure, particularly for apartment blocks that I think we're also discussing today. I don't know if that answers your question at all.
So for apartments more so than for housing?
Yeah, certainly, yeah.
I would agree with Jason on that point. I think a lot just depends upon the situation of each individual site, really, but I agree with Jason.
Thank you.
Thanks. Dan.
Thank you, Chair. With respect to leaseholders, based on the evidence sessions and the roundtables that we've been involved in, I can, I think, inform yourselves there are a lot of unhappy people out there. But that's just to put it mildly. But we're just let's look into the compensation schemes with respect to ground rent. Now, last week, one leaseholder accused developers of offering, and I quote, as little as they can possibly get away with to compensate leaseholders affected by onerous ground rents. Now, is that a fair assessment, analysis in your opinion?
Well, if I could answer that on the basis that Taylor Wimpey does have a voluntary assistance scheme for our customers who were affected by a specific 10-year doubling ground rent clause. We took the matter extremely seriously when it was brought to our attention around autumn 2016, and I think the reason for that timing is that the leases that we created with that specific clause was used on new developments between 2007 and 2011, was coming up for its first doubling and was starting to cause concerns to customers. We did act very swiftly. We talked about Taylor Wimpey's decision right at the very start of 2017 to move away from the sale of leasehold homes or houses in favour of freehold. We also, having undertaken a sort of a detailed internal review, established a provision of 130 million, which we announced in April 2017, and we've engaged with freeholders to provide umbrella or framework agreements such that our customers with that particular ground rent clause are able to convert their lease from the 10-year doubling clause to an RPI. It has been a slow process, but we have engaged, I think, quite well with the freehold sector. I'm able to confirm that we have agreements with freeholders that represent 95% of those leases. We are in detailed and advanced legals with freeholders representing a further 2% of those leases, and we're still in active negotiation with freeholders representing that very small balance. We have been managing the scheme now for a year, having announced the first agreements with freeholders in September, October last year. And whilst I would accept that progress has been slow, it has been gaining momentum, and we have been converting a material number of leases now to an RPI lease, and we will continue to do so.
I will come on to that
Yes.
RPI aspect later on as well. But Mr. Jenkinson, what do you think?
Well, my issue is we identified a problem mainly with event charges back in 2014, and the company made a decision to not dispose of any ground rents to any third party, so we haven't made any disposal since 2014. We've held them within the business to ensure our customers got treated fairly to do with them. Once it became clearer, then after that we also wrote to all our customers in July 17 and offered them a right to buy. Any of the ground rents which we'd materialised since 2014, we offered each customer an opportunity to right to buy that individual ground rent after 2 years. That ground rent was going to be at the lesser of 25 times the ground rent or the market value of the rent at the time. Interestingly, not that many people have actually taken up since that offer. Only 160 people have actually taken that offer up. I think once they knew they could buy that for the sum, which equates to roughly 0.5% to 1.5% of the value of the property, they didn't want to take it up, they just wanted to know the comfort of it. Secondly, we've controlled the event charges in there, so there can never be more than £250 for a major extension. Minor issues are free, and structurals are £75. We also put these clauses into future leases, not just to protect our current customers, but the ones beyond the first sale. And thirdly, we reviewed all our leases that we had, that we owned, to and see if there was any what we considered to be onerous leases. We identified 60 potential leases where we had a problem, and we wrote to all our customers and we changed their leases to a term that were acceptable at no cost to them.
Okay, Mr. Honeyman?
Yeah, similar to Dave, really. We don't experience the level of complaints that sometimes I read in the press across our group. Over the past few years, we've had 142 divisional complaints about leaseholds. We've had 18 at group level, and I can only put that down to the fact that we don't have, as a business, any defective leases. We don't have the onerous leases that Jennie's referred to. All of ours are subject to RPI, and hence the lenders are willing to lend on that basis. The majority of complaints that we've experienced have all centred around consent fees and the cost of acquiring the ground rent in the future.
Okay, well, as I said, I will come back to RPI later on, but let me reassure you that we have experienced lots and lots of complaints in the evidence sessions. So somewhere along the line, our things are not quite corroborating. But okay, let's go in terms of Taylor Wimpey. During our last session, Chair, we actually had a discussion about the Taylor Wimpey, the ground rent review assistance scheme.
Yes.
And that was actually criticised for having paid out only £11 million out of the £130 million that was reportedly set aside. Now, as well as being very, very slow and being very difficult to understand, so shouldn't you really revisit how that scheme works?
Firstly, the figure referred to, the 11 million, was a point in time and reported for accounting purposes in July to the city. I don't think that reporting on our sort of progress on the utilisation of the provision is necessarily the best indicator for members as to the progress that we have made. And we have made substantial progress. We have expended or utilised a significantly greater figure than has been identified. We have had a significant number of our customers apply. As I say, we have had over 2,200 deeds of variation now completed. We have a significant number of customers in the system. It is a complex process. We have sought on behalf of our customers to take as much of the complexity out of that as possible. So we have worked with the freeholders to agree that framework agreement. We have set up through external solicitors a legal hub that will assist the customer and their solicitors. We have a customer-facing team who will assist customers. We have a website with readily understandable FAQs. We do, however, have a meaningful number of customers in our system who have, for reasons of their own, and we can see that there has been a meaningful number choosing to pause their applications while the government's consultation is in train. We can process applications in somewhere between 8 to 10 weeks. We have achieved conversions much faster than that. Sometimes it takes a little bit longer. We have a number of solicitors, the freeholders, lenders and management companies, but we are determined to resolve this matter on behalf of our customers. We've indicated no end date on that scheme, and we will continue to work hard on their behalf.
Okay. Well, Taylor Wimpey seems to be ahead of the curve on this particular aspect. So, gentlemen, in terms of Bellway and Persimmon, do you actually have any similar plans to introduce such compensation schemes?
I don't think ahead of the curve's quite the right line. I think behind the curve almost, because we're not in that position. We didn't have the leases exactly the same as them. As I said, we weren't in the same position as them, so we didn't have to carry out the same actions, but we didn't rest on our merits. We noted back in 2014 there was an issue with event charges, therefore we didn't sell the freeholds. They were actually kept by us, therefore third parties weren't able to charge the amounts which has caused so much concern. Also, we haven't just done that, we've gone much further than that. We've introduced a right to buy to our customers. So if they want to buy that freehold, they can buy it off us at the lesser of market value or 25 times.
Right. And what other compensation schemes are you looking to introduce?
We haven't got any onerous leases, so we haven't got that level of complaint that Taylor Wimpey have. Mm-hmm. So we just haven't got that volume of complaints coming through our business. All of our leases are perfectly marketable, as they would be on an apartment scheme. So I just don't have that problem.
Okay, fair enough. Obviously, it's there for the record. But let's come back to the issue about the RPI. Now, some developers have made offers to leaseholders to convert the doubling ground rent clauses to one that actually increases at the rate of RPI. Now, is that really a better deal for leaseholders, Mr. Jenkinson?
It depends on who actually controls the freehold itself. Personally, I don't think that's the real issue, whether it's RPI or doubling. It's more important because you can have, if you're doubling £2, for example, or it'll be £4. What's more important is the starting amount and where it ends up with and where it's capped. Mm-hmm. And the crux of this whole point is, do they have a marketable product at the end, and does it materially affect the value of that customer's house? We don't believe we have leases like that. However, if anybody was to bring a lease like that to me, I'm more than happy to look at it. I'm more than happy to deal with it personally and have a look at it. I just don't believe, similar to Jason, I don't believe we have them leases.
So, you don't mind whichever one, whether it's the doubling ground rent clauses or whether it's at the rate of RPI.
From Persimmon's experience, that's not what really worries customers. What worries the customers is how much they actually got to cost them to buy the freehold.
Mm-hmm. Well, I mean, we had one person in terms of giving written evidence, and they said that I must sign away my rights, and I quote, to take any further action and that was actually against Taylor Wimpey, and be prepared to have RPI increases for the entire length of the lease. Some offer. The current doubling lease terms provide the freeholder with a ground rent in excess of £800,000 for the term of the lease. The proposed changes to RPI generates ground rent in excess of £2.2 million for the term of the lease. How can this be judged as a good offer and in a very well put? So what do you think?
Well, there are a few points that you've raised there, if I may. The first is in respect of what's known as the settlement agreement, to which the customer is referring. It is not a requirement to sign away their rights. The settlement agreement has been defined on the most narrow terms, which we have set on the most narrow terms, that addresses only and very specifically the doubling ground rent provision clause. It in no way prohibits or would prevent any customer from seeking a legal remedy on any other matter to do with their lease or indeed to third parties. So I'm quite happy to provide committee with a copy of the settlement agreement. It's very straightforward. It's a single A4 page, and we have made that point with great clarity to customers who are concerned. Regarding RPI, RPI is by far the most significant lease in the residential leasehold sector. It's readily understood. We talked earlier about preserving effectively the value of money. If a lease is set at £150, then effectively RPI reflects what that would be worth in years hence. The issue with the doubling ground rent was specifically around the affordability of that ground rent. The clause only doubled 5 times. There was only 5 review events, but the escalation was a matter of some concern to our customers, which we entirely understand and felt that we should respond to. In returning them to an RPI lease, we've effectively returned them to a lease that would have been the case had we not introduced the doubling ground rent, and is the lease of preference by the sector. So, I think that really we've put them on a level playing field with the vast majority of leases in the residential leasehold sector.
Okay, and for the record, Mr. Honeyman, what are your views on this particular issue?
Yeah, sorry, I feel like I'm always trying to blame Jennie for the problem, but it's the doublers that are the problem. Our lease is our standard lease from Bellway is CML compliant, which is the Council for Mortgage Lenders, and it's accepted by all the main lenders, so we don't experience the problems that you're referring to. All our leases are perfectly marketable, and it's a very similar lease to the one that we use for our apartments, where we don't experience any problems.
Okay, thank you, Chair.
I just want to clarify the understanding from each of your perspective. I understand, Mr. Honeyman, that maybe this doesn't apply to Bellway, but certainly from Jennie and David's perspective, it's the principle of the doubling. I just want to confirm. If the ground rent starts at, say, as I referred to, ground rate typically of £200, after 10 years that becomes £400, after 20 years it becomes £800, and thereafter up to 50 years when it becomes £6,400. There are companies out there that double the ground rents after 5 years. So you actually get to your £6,400 after 25 years. What's your understanding of what your companies classify as the doubling of ground rent?
I'm referring specifically to a lease that Taylor Wimpey introduced in 2007 to new developments up until 2011, which was a 10-year doubling ground rent lease. We don't have.
So every 10 years, the ground rent would double. So
yes.
Starting at £200, after 10 years it would go up to £400.
That's correct.
After 20 years, £800 and so on.
Mm-hmm.
Okay.
Yes. And as I've said, we're uncomfortable with that, and we've introduced a voluntary assistance scheme to resolve the matter for us.
Clarify that.
We have some doubling ground rents, and it's important to understand why that came about. It was to do with the customers wanting certainty what they were going to pay in the future, but they're capped. So the actual amount of money that it works out the same as if it was RPI'd or near as could be expected to be. There's none of our ground rents at all.
So how can you predict what RPI is going to be?
Well, you can't. That was why some of the customers would rather have certainty what they knew the payment was going to be. But what we didn't want to do was keep doubling. No, that was capped, so it doubled. When it reached £1,200, for example, it was capped, it couldn't go any higher.
Right, okay, thank you. I just want to clarify that.
Very briefly, I think you're saying that you haven't got onerous ground rent arrangements because they're linked to RPI. So you're all saying if ground rent increases are linked to RPI, they're not onerous.
My personal view, there's no definition. I think it depends.
That's your definition.
It depends where your starting point is with RPI. If it was a £10,000 ground rent, it was RPI linked, then it would probably affect the value of the house. If it was £100,000, what I'm saying, to be clear, I think it's with anything which materially affects the marketability of that house.
Mr. Honeyman?
I think if you've got a modest ground rent that's on with a rent review at 10 years on RPI, I think it's perfectly acceptable.
My view would be that there are very specific legal and financial accounting definitions around onerous, which I'm not qualified to advise the committee. What I can say is the 10-year doubling ground rent lease that Taylor Wimpey introduced is not consistent with our high standards of customer service, and we felt uncomfortable and wished to work on behalf of our customers to resolve the matter.
A linked to RPI, it isn't onerous.
I think...
well, that's your definition, isn't it? It isn't onerous if you've got a ground rent increase linked to RPI.
I think it's a combination of factors. As I've said, I'm not legally qualified to advise members on the definition of,
well, I think you can tell the
what is onerous.
Whether you think your arrangements are onerous or not.
I think the government's work on looking
at
I'm
asking for your view, not the government's view.
My view is that onerous has some very specific definitions in legal and financial terms. We're uncomfortable about the doubling ground rent that we introduced, and we are working to resolve.
So, linked to RPI, your ground rent arrangements are not onerous.
The RPI form of lease that we're returning our customers to, I am satisfied, is marketable and saleable and affordable.
And it's not onerous?
It's not onerous.
And that goes for your arrangements as well, and the other two companies?
As I've said previously, there's no definition of what an onerous ground lease is. You've asked me what I think it is. My personal view is if it's a lease which affects the marketability of the house, then I think that's onerous.
Sorry, can I come back on?
Yeah, you just
Sorry, yes, Chair. I'm satisfied that our lease is CML compliant. It's satisfactory for our purchasers and it's fully marketable.
So I just want to come back on this issue of what definition of onerous is, because Mr. Jenkinson, as you're quite rightly saying, it's whether it's marketable or not. Would you accept the marketability as depending on the lenders being willing then to lend money for the purchase of that property?
I couldn't agree more. I think that's a perfect assessment.
Good.
That's why you have to go to the commercial.
So the definition of that is 0.01% of the value of the property. If the ground rent is above that, it's considered onerous.
That was the nationwide rules that they introduced. If you actually have a look at what the CML rules says itself, it says on affordability, lenders need to establish if the lease will have an impact on the borrower's affordability. It is a regulatory requirement for lenders to take account of all known future charges. As such, understands that the levels of ground rent, how they increase over the mortgage term, and other known charges due under a leasehold agreement are relevant to a lender's assessment of affordability. If ground rents or other charges have an impact on the value and the saleability of the property, this needs to be taken into consideration in deciding whether how much to lend. That's basically saying if that ground rent, due to its terms and conditions, affected the saleability of that property, then they shouldn't lend on it. To me, that is a reasonable assessment. If any of our ground rents had a criteria in that, it had to have been valued in accordance with them conditions, and therefore they wouldn't have been able to lend on it.
So if any of your customers, because they're still your customers because they're leaseholders as opposed to freeholders, can't get a mortgage or can't sell their property because other people can't get a mortgage because of the ground rent issue, you would accept that that's an onerous?
I totally accept that point, and if I was, I'm more than happy to look into it. I've had a look over the last 2 years, how many of these we've had.
Well, okay, so I'm happy that you're prepared to do that, because we've got lots of evidence from your customers saying that they can't sell their properties.
I'm more than happy to look at that for individual cases.
Okay, fine.
Right, finally, before I go to Mark, just back to Taylor Wimpey. You spent more than 11 million on your scheme. How much?
over 3 times that in terms of what we've utilised, and then we have a significant amount that's impending.
Can you, if you haven't got a figure immediately to hand, can you let the committee have a figure?
I'd be happy to write to committee, yes.
Mark.
Chairman, thank you. Perhaps we could just look at the government's proposals for reforming ground rents. The proposal at the moment is to cap that at £10. We've had a number of written and oral evidence pieces provided to us that this could have adverse impacts, but as builders, what impact would a £10 cap on ground rents have on house building?
Can I answer that in the first instance? So to put a £10 cap on everything may be a blunt instrument to apply to all. And the reason I say that is because certainly some apartment blocks that I build in London are quite complex. So you'll have 25 stories, you'll have subterranean central heating plants, you've got concierge services, gymnasiums, yoga rooms, all sorts of facilities within that envelope. And to charge just a £10 ground rent to a complex building that needs a specialist to manage that building for the long term is probably too low, but it may work on, a low-rise block of, say, 12 or 15 apartments without all the complexities of it. So I certainly support a calculation for a ground rent, but the complexity and the style of the building, I would suggest that to be taken into account.
Presumably, a lot of the things you just described would actually be covered by a service charge.
Yes, it would, but it's the quality of the freeholder as well. So you wouldn't want an inexperienced freeholder managing a building, being responsible for firefighting lifts and the like in a complex high-rise building in that instance. And I don't think you're going to create sufficient investment value to attract the quality investors for long-term management.
But would it affect the actual house building numbers?
Would it affect?
Would you build fewer?
Yeah, would I build fewer? No, I don't think so. No, I'd be. No, I don't think so.
Okay, thank you. What about you?
I would agree that the level of sort of income from the sale of freeholds is relatively small against our main business of selling homes. I think I would share the concern around the sort of incentive for a professional freeholder to be involved in buildings of sort of certain typologies that are complex, and would reconfirm the discussion that we just had, really, which is the important thing is that it's clear, appropriate and fair and transparent from a customer's perspective.
So you're happy with the £10?
I think it introduces issues, as I say, in respect of the incentive for freeholders to remain involved in the sector, particularly for complex buildings, but we will conform to whatever the government's outcomes of the consultation.
But a typical housing estate in which you have detached properties, how complex does it have to be?
Well, we've already moved away from any sale of leasehold houses where we have the ability to do so, so that's not likely to be an issue. And as I've said, it's not a significant income for Taylor Wimpey.
And what about Persimmon?
I have no problem at all with the £10, and I think a lot of the things that Jason was talking about could be dealt with through a management company anyway. And as for affecting production, I don't think it would have any impact at all.
And some of the witnesses that who've written to us, have come out with a number of other things that would be adverse as such. Are there other aspects? I mean, Mr. Honeyman, you've suggested this might impact on complex, high-value flats. And one can see that, though obviously service charges would resolve much of that. Are there other adverse impacts that you can see as people who work in the sector that we as a committee should be aware of from such a cap?
The only thing I would say is a lot of government bodies sell land leasehold. It's
Right.
more about because they like to keep some level of control. But if I was a £10 cap and that probably would get around that issue. We just need to be careful around that point because it is generally government bodies who sell land as leasehold.
Right, okay.
Yes, it is true that many of local government disposals are on a leasehold basis.
Right. I mean, some people said freeholders will be driven out of the market. Now, some of our constituents might be very grateful for that, given the behaviour of some of them to date. Is that your view? Would that drive freeholders out of the market?
I think certainly in terms of those sort of large institutional freeholders, I fail to see what the incentive would be for them to stay in the market. But I understand that representatives of the freeholders are in the next session, and that probably would be an appropriate question to ask them.
I'm sure they will. Thank you.
Yes, coming back to some of the evidence that we've received, we've got a lot of accusations that purchasers of leaseholds were told at the time of buying their leasehold they will be offered the freehold either at a future time, either within 1 or 2 years, at a lower price. They then discovered that the freehold has been sold on without their knowledge, and they're not even able to they weren't offered the opportunity to buy the freehold. So can I ask this, we've got evidence from individuals, starting with Mr Honeyman, who are customers who've bought leasehold properties from your company and have been told now that their properties have been sold on to, I'll get the name of the company correctly, Adriatic Land 4, brackets GR1. And there are several here of different developments where the freehold's been sold on without the leaseholder's knowledge, and they're now not able to buy the freehold at all. Why is that?
Can I explain how we operate as a business, and then that may sort of add some colour to... So what we as a business are not long-term holders of assets, so we sell on the freehold at a point in time when we complete a development. And the way we do that... Sorry,
so can I interrupt you then?
Yeah.
Why don't you, at that point, when you're selling the freehold, offer it to the leaseholder direct and say, you now have the opportunity to buy this freehold?
Well, if I can just explain how we do it, because we've never done it that way. So what we've always...
So I'm asking why you don't do it that way.
Well, principally because a house does not have the right of preemption to acquire the freehold. So we've always relied upon that to put all of the ground rents in a portfolio and sell on that portfolio to an institutional investor at the end of the development. So that's how we've always operated as a business, certainly in terms of the Northwest.
So your contract originally, you sell the leasehold, you sell off the freeholds to someone else, and then the freeholder comes and says, well, no, we're not prepared to sell the freehold to you, or you can buy the freehold, it's now gone up to £50,000 instead of what you said at the beginning, I think, during your evidence, of maybe £3,000 or £4,000 difference.
Yeah, certainly.
So yes, that's the position.
Yeah, certainly the purchaser's rights shouldn't change whether I'm the freeholder or an investor is the freeholder. I think what you're referring to, or certainly what we've experienced through a number of complaints, is where we've sold on the freehold interest, and you could have acquired the freehold from us at between £3,000 and £5,000. Where we've sold on our interest to an investor, they've charged a higher rate.
Yes.
Because the market has gone up at that point. I think we've gone through a period where the market was there, it's gone up and it's come back down again. I've not heard of a situation, sir, where they've refused to sell the freehold. I've only had experience of the ground rent, the cost of the freehold has increased. And as I understand, and you may hear it a little later in the second session, that all of our purchasers can now acquire the freehold at the original price, because I think the market has now reduced. Does that make sense?
It makes.
I certainly haven't heard of people being refused.
So what's your company's arrangement with this company, Adriatic Land? Is this presumably is a normal company you use?
We only sell to institutional blue chip investment companies, and Adriatic, who I know as Long Harbour, are an FCA regulated investor and an experienced property manager.
Right. So, but obviously it's up to them then to determine what they do in terms of the freeholds for your previous customers.
It is.
Right. Okay. Fine. So. Why is it then that your company has this policy of you're going to sell it off to a third party and not offer it to the individual leaseholders at the time when you're offering the sale?
It's how we've always operated as a business, and I'm sure that's not the answer you want, but once a year we will...
No, what I'm asking is why do your customers not get the chance to exercise the opportunity to buy their freehold?
Purely...
You're just selling you're selling the freehold from out under them?
Yes.
Without their knowledge?
Yes, we are.
Right,
yeah,
okay. Well, I mean, I would regard that as being, quite frankly, a scandal. As not offering the opportunity for people to buy the property in which they live, and they've invested a large amount of money, to be told now suddenly it's going to be managed by a new freeholder without them having the opportunity. I think your company, my personal view, should review what you do in terms of business practice. But of course, that's up to you what you do.
Sir, could I just comment upon that? Because
sure.
I'm not sure I subscribe to it as a scandal. You're offered a freehold at the point of sale and a leasehold, and the law says that you've got the right to acquire the freehold after 2 years of living in it. And you're right. I do not. You're quite right. You're 100% right that I do not. I sell that basket of leaseholds or freeholds to an investor without asking the customer whether they would like to buy it again.
Okay. Do you think the law should be changed to stop that?
I think the whole area of first right of refusal is confusing, and I would suggest through the reform process I would take it a step further. I'd have a cap on consent fees, I'd have a cap on calculation of ground rents, I'd have a calculation on the value of the freehold, and I'd make the whole process more consumer friendly.
Okay, well I agree with you, but in terms of the right of first refusal, do you think the law should be changed in that respect?
It's confusing, so you've got no right...
Well, I'll tell you, could we have a yes or no?
Yes.
You do agree, so fine, good, right. Okay, can I take from Persimmon and then Taylor would be the view of how you sit in this particular...
I think your point's a valid one. We noticed this back in 2014. That's why we took the view not to enter any further arrangements with these third parties, and we decided to introduce a right to buy to the customers as I previously outlined, which is capped at 25 times or the market value, whichever is the lesser.
What have you done for the people prior to 2014?
The ones prior to 2014, obviously that situation we weren't aware of at that time, but we've got very little complaints before 2014.
Okay, all right, fine, thank you.
As part of our evidence to the committee and in our response to the government's consultation on tackling the leasehold market last year, we did recommend that inequity between offering the right of first refusal to leaseholders, leasehold houses should be changed. So we would be very supportive of that change, and we also recommended that the fairness, speed, and cost of the sort of the enfranchisement process, should a freeholder not willingly sell at a fair price, be reviewed to benefit customers also.
Okay. So I'm going to just come back to your one issue, that is the relation that there could be conflicting connections between your company as a housing developer and some of the investment companies that are buying these freeholds. It's been suggested to us that there may be senior executives and management of the development companies that may also be senior executives or directors of the people that are buying the freeholds. Are there any cross connections?
That's definitely not the case at Persimmon.
Yeah. It's definitely not the case. I think where this matter originated from, so when you sell a subsidiary company,
yeah,
within that company there are names of directors, and that company is then acquired. That's how the freeholds are sold. So I think there was some confusion around there, but we're certainly not linked to any investors in any way, shape or form.
So we can be clear that none of your listed directors or senior managers are senior managers or directors or have any financial interest in the so-called blue chip companies?
100% certain.
Okay, fine, thank you.
I can confirm likewise.
Okay, thank you.
Helen, just follow up with Persimmon. I mean, you don't sell houses now, leasehold, or you're also saying that there you're offering, where you have done, the opportunity to buy the freehold. What about flats? You're still selling your flats freeholds on to third parties, aren't you?
No, we haven't sold any on to third parties, not since 2014, no.
So
we're still selling leasehold, but we haven't sold any on to third parties in apartments.
So you're keeping the freehold of flat complexes you build, are you?
Yes.
So what is the connection then? We mentioned Adriatic land. I mean, Adriatic land number 2 was originally Persimmon group number 3. So what's your connection with it?
Adriatic was a deal which was done in 2013 for the disposal of 470 properties which we made. Yeah. There's been no contact with Adriatic since 2013.
Right, so you haven't sold any freeholds?
No, the last disposal was 2014 of 514 units.
Right. Okay, right, thanks. Yes, Kevin.
Just back to the, you talk about saleability, that's the criteria, whether it makes a property unsaleable, Mr Jenkinson. But
sorry.
You talk about saleability being the criteria you'd apply, whether a ground rent is fair, whether it makes the property saleability. But there's also an element of fairness here that we look at, aside from the saleability of a property, on these issues. You said before that over the last 10 years, none of you have increased ground rent significantly over 10 years. That's what you said before in your earlier evidence. That was right, wasn't it? Yeah. If you applied RPI to something 10 years ago that was, say, £300, it would now be £403. So that's increased by 33% on IPI. Why is that? Why would you have... If you're saying they haven't increased over... How can RPI be fair?
Well, I think I need to do some work to demonstrate what we was charging 10 years and 10 years before that, before I could answer that. And the only indice that seems to be acceptable to lenders is RPI, and it's CML compliant. I mean, I can't offer you more than that, I'm afraid.
What would be acceptable to lenders, you probably agree, is nil increase would be perfectly acceptable to lenders, wouldn't it?
Well, yes, but it's the main lenders. It's having a CML compliant lease that the main lenders support, and then that you have a marketable lease. I think that's.
But a zero increase. I mean, there is a difference between leasehold houses and apartments in terms of the stewardship. I accept that. But on leasehold houses, there is no justification for a ground rent to increase. Is there? No justification, other than a profit opportunity for yourselves.
Well, my limited understanding of it is if you have a long-term interest in the property that's got a 10-year rent review based on IPI, it's perfectly acceptable.
To who?
I can't, to the lenders, to the purchasers.
We are talking
and
about not just the lenders here, we're talking about
yeah.
the people who live in the houses and own them. And it's not acceptable to lots of them that effectively there's an increased cost for no purpose, as the Chair said in his first question. There is no purpose to this. It's just an opportunity to create extra revenue from the properties you're selling. That's the fact, isn't it?
Well, we either acquire the value at the point of sale and sell it for 200,000, or we sell on the freehold at a later date. I don't think you're suggesting it's bad practice, but it's certainly not the way we operate. We'll either collect all of the income at the point of sale, or we'll sell a leasehold and sell it on at a later date. That's how we've done it in the past.
Can I just push it? In terms of the people pre-2014, Mr. Jenkins, you were saying those people you might have sold those ground rents on at a multiple, and there's nothing you can do about that because you've just sold them on.
We haven't got the same level of control. Obviously, if I was in a having problem with any of them, obviously I would look at that. But as I'm aware, I haven't reviewed the ones we sold. We're not aware of any leases that would affect the marketability of the property. But if I was, I'm quite happy to look at them.
Well, we speak to lots of people, for various different people who live in the houses you've built, who are very unhappy about this. Wouldn't it be the right thing to do just to make a commitment to buy those freeholds back, those freeholds back, and sell them back, or back to those people, even if it's pre-2014? You must have an ongoing relationship with the people you're working with in terms of Long Harbour or whoever else. You must be able to do that and do the right thing, even though it might cost you money. But if those leases have increased unfairly through an RPI charge that is for no purpose, it's going to cost people more and more to buy these leases back, even if they're available to them. What you're saying is they're probably not available to them, and they can't get out of these leases because they're sold on to a third party and they can't do anything about it.
If I could comment, I think there are a few things there. Firstly, the purchasers of properties will have received information that clearly indicated that they were acquiring freehold or leasehold properties. They would have been advised by independent conveyancing solicitors. The terms of the lease, certainly in respect of Taylor Wimpey's leases, were clear and simple. They were aware that they were not buying a freehold property, that it was a leasehold property, and they will have been advised by their independent solicitor of the terms of the rent review. And if that isn't the case, and I understand that there have been issues that have been raised, then the customers should be going back to their conveyancing solicitors. We have looked at all of the relevant information that was available at the time of these sales, and customers have raised some concerns, and where they have done so, we've asked them to present us with any relevant information for review and consideration, and to date we haven't received any relevant information that suggests that they were unaware of the nature of the property or the tenure that they were acquiring.
Slightly different to our experience so far, but we'll come on to that point. Okay. Right. Mary.
Thank you. Actually, it leads very nicely on to the question I was going to ask, because contrary to that evidence, previous evidence which we've received suggested that people actually didn't know about the terms of the lease and didn't know that there were onerous ground rents potentially involved in them. In fact, what was described to us was a rather cosy relationship between developers and solicitors, conveyancers, mortgage brokers, which could actually be termed a commercial relationship, with intimation that there were referral fees being paid in exchange for introductions, etc. I'd be interested in your comments on that. We did hear that some buyers were required or induced through offers of discounts, free carpets, a loan, etc., to use conveyancing solicitors recommended by their developers. They seem to think that there was a list and that they should go to this list. Why do you think so many leaseholders therefore claim their solicitors failed to inform them of potentially onerous terms to their leases?
A solicitor is required to act independently on behalf of their client. Whether they were identified as part of a panel solicitor, and we do, Taylor Wimpey does, as do many of our competitors, to assist customers identify solicitors who are familiar with the development, operate locally, and familiar with new home sales. It is entirely a matter for the customer to decide who they wish to use, and even if they're on the panel that we recommend, the first duty of that solicitor is to their client, and it is the solicitor's responsibility to ensure that the customer is fully aware of both the ownership structure of the property and the terms of any lease.
May I just add to that? We provide a local list of solicitors on each development, and often get asked by purchasers for assistance, whether it's flooring contractors, solicitors, curtains and carpets, those types of things. We have a list of solicitors that are local to that development, and we would put on that list where we've previously had experience that they're providing a good service to our customers. There are no commercial relationships between Bellway and any solicitor. We've never received any referral fees, and that list will change from region to region across the country. And it's the purpose, if I could just explain the purpose, is some conveyancing solicitors are set up to work with new builds, to run volume through their business because they have a lot of conveyancers. So those types of solicitors are used to working on developers such as ours or Taylor Wimpey, whereas some conveyancers are more boutique, or there's just one or two partners in that practice, and would be slower and less helpful. So we always find the repetition and the volume guys provide a better price to the purchaser and are more used to that type of land.
Could you see or envisage a situation where a solicitor may not be as inclined to give the full gamut of information about the leasehold and its potential pitfalls because they rely on the business that they're getting from the developer?
I would suggest the opposite, because if you're a Northwest solicitor, you're used to selling leaseholds in that fashion, and you should be more adept at explaining that to your customers. We train and instruct all of our sales advisors to notify purchasers at the point of reservation what type of tenure they're buying. It's set out clearly on the contract documentation. And further, we insist that they seek independent legal advice. So I don't always subscribe to the idea that people were unaware of what they were buying. I think the whole doubling ground rents is a different issue, but I don't think they're unaware of buying. And I certainly haven't got complaints in that regard.
So it is really, it is that the solicitors may not have been telling them the details of the ground rents. Could this be a potential problem? It's clearly from the evidence that we received. This is something that people were raising.
The evidence you receive compared to our experience. You have to remember there's 5 clear points of contact when this will have been made out. At the reservation stage, it's made clearly out. They sign a reservation form, or we're trained to tell them. When they meet their brokers, this has got to be factored into their financial viability before they even apply for a mortgage. They had to know it was a lease. The solicitor, there's no way they wouldn't tell them that it wasn't a leasehold property and explain the ground rent. When they apply for the mortgage, it has to be filled in the mortgage application form. Then finally, the valuer takes account of it, and I've read the CML rules. I'm not sure what more we can do. I just can't reconcile the information, what you're being told, by how they wouldn't know. What they may not have fully understand the implications of it, but they must have known it was leasehold.
Is it the responsibility of the solicitor to point out the implications of a doubling ground rent, or
it would be, yes. Yes, and the broker, because he'd have to factor in the affordability for the mortgage and the value when he comes to value it. All that was taken into account. The code from the Law Society is extremely clear on what they have to do. They have to act independently and look into after their interests in all aspects of the transaction. If they've not done that, they've got a clear case to go to the Law Society. And I know you're going to be speaking to them later. I really struggle with this one to understand how they wouldn't have known.
Okay. There's one, it's an interesting point. There's one thing knowing, it's another thing understanding the implications, isn't it? And as you said earlier, Mr. Jenkinson, you said that if something affected its saleability, then that is a problem. But you must concede that a ground rent that starts at quite a high level and then doubles very definitely affects the saleability of that property.
If it was ground rents, which it comes back, but it wouldn't get, it'll have been valued in accordance with the CML rules.
I realise that.
It wouldn't have getting a mortgage, it wouldn't have getting a value. And I don't know how that could have happened. If there are there, and there's examples which Persimmon have done, I'm more than happy to look at them, as I keep saying. But in terms of understanding, I just can't see how they wouldn't know it was a lease.
I accept that. But you will agree that a ground rent that starts high, say £400 a year, and then doubles every 10 years, does render that property unsaleable. You accept that point?
I wouldn't say it would render it unsaleable. It could affect its value of our house.
So you agree, therefore, that the solicitor, who, you're right, does have an obligation to look after that client.
And if he hasn't,
at that point
be recourse through that to 2 clear actions. One, they refer to the Law Society, or they do the normal litigation route.
You agree then that solicitor...
I think he's got to explain to them what the cost is and what
sorry?
I think the solicitor would go through it, and you'd have to explain that, yes.
But clearly he hasn't explained it in a way that somebody's understood that's going to materially affect the value. Therefore, that solicitor is potentially liable in that position, therefore, for not doing their job right.
Potentially, depending upon individual cases. Obviously, I can't pass on that, but the potential would obviously be there if he hadn't informed them properly and acted in their interests.
Well, I think there are quite a few cases we may well refer on to you, because the descriptions to us, people are pretty sensible people coming in to buy a house. The sales assistant obviously has got a customer there, they want to advance it. Oh, that's the solicitor you go to, not a list, but that's the one. Pick up the phone, actually talk to the solicitor and make the arrangements for them. Now, because they're a solicitor who knows the area, knows the scheme, knows you as a developer. Exactly the point you made, Mr. Honeyman. That they'll get it on, they'll do it quickly. That's the description we've had in a lot of cases.
No,
Something was going wrong, wasn't it?
not at all. The real reason,
So
the real reason why,
yeah.
can I just explain? The real reason Persimmon use panel solicitors is to save the customer money, because they only need to review the title once. If you go each individual time, the biggest part of actual cost for a sale is to review the title.
Okay. So you say that's the solicitor to go to because they'll do it cheaper for you?
No, they'll save them the cost of doing the title.
Right, okay. I mean, I think there's something you need to look at there, and it may well be, we picked it up with the Law Society as well, but Helen.
We have heard evidence of a range of very problematic practices around leaseholds, whether it's doubling ground rents, whether it's selling on leaseholds, freeholds solely for the purposes of investment. We wouldn't be sitting here doing an inquiry if there wasn't that evidence. You wouldn't be sitting in front of us as witnesses if that wasn't the case. And each of you today have given us examples of ways in which you're proactively changing your practices under the pressure of public opinion in response to those problems. Those problems taken together have been compared in some of the evidence that we've received to the mis-selling of PPI. Would you agree with that analogy, and do you think there should be a similar compensation scheme for affected leaseholders?
I wouldn't agree with that characterisation. This is transaction, a legal transaction. As David explained, there are a significant number of touch points and professional advice being sought and rendered on behalf of the customer. As I've indicated before, we accept that the specific lease of concern to Taylor Wimpey did not meet our high standards of customer care, and we are working hard to resolve that on behalf of our customers. But we are satisfied that the information that was available to our customers and the nature of the legal advice that was offered to them was independent, and the solicitors, the legal advisors, have a duty of care to their client, not to the developer or the vendor.
I don't believe we've missold. All our leases are perfectly marketable, and I haven't got the problem that Jennie's got. So I don't believe there's a compensation issue or a mis-selling position there. I don't have any claims on my desk as we speak about the issue. And I think Taylor Wimpey, credit to them, they've had a problem, they've put their hand up, they've put in a provision, and they're trying to fix it.
My position is the same as Jason. Every customer, we've had about 15 customers write to us writing that I couldn't get a mortgage for the house. Whenever we've offered assistance, we've been able to get them a mortgage and the property's been sold on. We don't believe we have an issue the same way as Bellway.
Lots of your customers across all three companies who've been in touch with us would beg to differ on that. So I think that there is a job to do in terms of following up with that evidence, because the evidence you're giving us today simply doesn't reflect what many of your customers are telling us as a committee.
Yes. Do you support the government's proposal to restrict the sale of new build leasehold houses?
Yes, the government proposals appear sensible. I think we do welcome the inclusion of an exception for shared ownership houses, because I think it's important, given the wider housing debate, that there is access and a leasehold is required for shared ownership. I think the other exception needs to be that the definition of a house is something that's not clear, but there are instances where because of this sort of structural nature of a property, it would be impossible to sell it on a freehold basis. But otherwise, yes, we welcome the government's proposals around banning sale of
Any
leasehold
different
houses.
views? Thank you. Sorry. Any different views to that?
No, we certainly stopped selling leaseholds in the summer of 17. We went as far as to go back, and we had 3 developments where we only owned the leasehold. We had to go back to the local authorities to acquire the freehold so that we could forward sell it back to the purchasers. I've got 1 development left, sir, in the east of London, Barking Riverside, that I still can only sell on a leasehold basis, because I acquire the land from the Greater London Authority on a leasehold basis. And sometimes some of these urban developments do, Jennie alluded to it, do get a little bit complicated, because we have houses that sit on top of podium decks with parking underneath. So sometimes the best form of tenure is a leasehold in that instance.
Any
I would agree with Jason.
And what about the
90% of the time, yeah.
Sorry, the northwest. Is there any reason other than custom and practice that the northwest had a lot of leasehold homes?
I'm unaware of the reason, albeit it goes back very many decades.
I spoke to a managing director who runs a business for me, who has worked for me for 18 years. He's lived in Liverpool all of his adult life, and he owns a leasehold house. And I asked him the same question, and he said, Jason, I don't know, we've always done it that way,
sure.
And I own a leasehold house myself, and I'm quite happy with it. It's just endemic in that area.
Can I just touch on something called Fleecehold, which is, it seems to be there's an increasing occurrence of local authorities granting consent for freehold properties on estates where they're not probably willing to adopt the road. There might be some water management issues on that site, for example, sud schemes, for example, where effectively you're getting private management companies that are not subject to any particular rules, that seem to be able to charge residents of those estates whatever they want. And in fact, I've got a constituent like that myself. Property has been sold by London Homes that came to see me only recently. Any thoughts on what on earth is happening and what can be done about that?
No, but certainly I understand the problem. Local authorities are less willing to adopt public areas, roads, sewers, street lamps.
Why is that?
Because they don't want the obligation and the cost that goes with it.
Okay.
So often they're left with the developers who then create a residence management company to manage that issue.
So, okay. So they're granting plan permission on the cheap, if you like, taking some of the new homes bonus maybe and the council tax, but not necessarily the obligations of looking after those properties. Would that be a fair description?
I just think some of the developments are becoming more complicated. They may not have the skill set. They don't want the responsibility of managing it, and it's easier to push it back to the residents of the developer.
Mr. Jenkins.
I would agree with Jason's comments, what we've tried to do, because the problem is leasehold flats are protected that way until you're on about the management charges, which was Helen Goodman's speech the other day, I think you're referring to. What we've tried to do is put a contract in place, because houses haven't got quite the same protection, so we're running into the transfer the right way. There has to be a certificate to make sure any expenditure can be justified.
Yes.
I think you're onto a fair point.
So you need some more regulation in this area, basically?
I wouldn't disagree at all.
Right. Okay. Thank you.
Okay. Thank you very much for coming to give evidence to the committee this afternoon. I think we will be following up with you on one or two of the examples we've had, which maybe doesn't quite relate in the experience of the customers to the things you've told us this afternoon. Okay? Thank you very much indeed. Thank you.
Okay, can we go on next panel of witnesses?
Good afternoon. Thank you for coming to give evidence to the committee. Could I just ask you to go down the table and say who you are and the organisation you're representing today, please?
My name is Nigel Glen. I'm the Chief Executive of the Association of Residential Managing Agents.
John Dyer. I'm Chair of the BPF's Residential Management Committee.
My name is Mick Platt. I'm the CEO of the Wallace Partnership Group. We invest in residential leasehold titles. We have approximately 106,000 under management.
I'm Richard Silva. I'm an Executive Director of Long Harbour, an FCA-regulated residential investment firm.
Okay. Dan.
Thank you, Chair. Well, with respect to the various roundtable events and evidence sessions that we've had the roundtable event last month with leaseholders, and I can confirm that the loudest applause we actually had was when participants called for an abolition of leasehold. We've had the all-party parliamentary group on leasehold, and they have put in written evidence to the effect that, and I quote, "Leasehold is a form of residential tenure that has been abolished in most places around the world and should end in this country." And thirdly, we've got the Leasehold Knowledge Partnership, and they are arguing that almost nowhere else in the world continues with this archaic and deeply flawed leasehold system, which means that flats are sold as tenancies and leaseholder owners are therefore disadvantaged. So, given that background, common hold is an alternative model which leaseholders can own and manage the properties. What additional value are freeholders actually providing within the process?
Okay, if I can go first on that. First of all, I should say that we support the government's proposal to ban leasehold houses. If you look at apartment blocks, there are slightly different structure to apartment blocks. There are lots of different vested interests. You could have owner-occupiers, you can have buy-to-let investors, you can have commercial units, you can have housing associations. And what the freeholder provides for an apartment block is independent stewardship and governance. The freeholder is the only investor in that building who is there for the long term, there to preserve the long-term value of the building. Most occupants of a block of flats will, a flat will change hands between roughly every 5 to 7 years. So we preserve the long-term value of the building. We uphold the covenants in the lease, which means that we are independent. We are independent arbiters between the varying different interests in that particular building, and we ensure managing agents work in the interests of leaseholders. We are the ultimate safety net for leaseholders when things go wrong. Now, obviously, there are various different types of ownership. You've mentioned common hold, but we, and obviously, people have that provides an element of choice for consumers. But we believe the presence of a long-term freeholder is of benefit to people who live in apartment blocks.
Mr. Silva?
I'd agree with Mick's comments entirely, and I think for the provision of those services and that long-term oversight and stewardship, a reasonable ground rent is important. For the record, we absolutely agree with the government's direction of travel in banning leasehold houses going forward. Okay. We completely agree with the elimination of onerous ground rents, and we also agree that improvement and regulation in the managing agent regime within blocks of apartments is absolutely the right thing to do. In that context, we have produced, and this committee has received it, I think, at the end of last week, an industry-led code of practice, which actually enshrines a lot of these disciplines and principles, and was pulled together by a large cohort of institutional investors.
Okay, Mr. Glen?
As a managing agent, in a sense, we don't mind who manages the building because we're appointed to manage on their behalf, whether it be a freeholder, an RMC, or a common hold. And in one sense, at the moment, we do have something philosophically similar to common hold when we have RMCs, where you have leaseholders who come together, enfranchise, buy their own block and manage it, so we can learn from that. There are advantages and disadvantages to each. If I take the RMC one first, you have the obvious advantage that the people that, as a managing agent you're dealing with, are interested in the development personally, so they have perhaps a little more short-term view than maybe others because they're only there for 5 to 7 years, but you're dealing with the people who actually live there. So that's an advantage, because if you're dealing with a freeholder, you also then have to deal with leaseholders as well. A disadvantage of that is don't underestimate how much effort there is in actually managing a building. So I've been on an RMC board. It's not funny the amount of work that involves. I mean, my particular, where I live, is an RMC. They meet every month 5 to 6 hours for a board meeting alone. Emails are flying to and fro every single day. So there's a lot of work involved there. My concern on that is we will then have people who have, shall we say, not potentially the right set of skills or knowledge of property law in particular. So there are many examples of where people who have RMCs when I had a company, instructing me to do things which frankly were against the law, but they didn't know any better because they weren't familiar with the law. Advantages of working with Commonhold are those, the idea of having a similar document instead of a lease but a contract is very, very attractive for managing agents because, as you may be aware, every building has a different lease, so you have to be familiar with the individual aspects of each lease. That's something which is not good. The advantages of working with a professional landlord, if they have a portfolio, it's a single point of contact. So again, speaking selfishly as a managing agent, that just makes it operationally more efficient. They are up to speed with legislation, so that is a big advantage. They have the time to invest in the property, whereas an amateur board, as I say, mine can only meet once a month, and that for them is very, very onerous. You will have access to somebody. Again, a board who's an amateur board tends to have difficulty in recruiting people. We saw that in Australia, where they have strata, which is effectively Commonhold, and they found, I think it was 37% of the board said they had difficulty in recruiting. So there are balances one way and the other in each one.
Okay, Mr. Dyer?
Similar to that, the original question was what's the advantage of freeholders? It is a long-term, a lot of freeholders are there for long-term. As I work for a firm managing agents, the big advantage of a freeholder is quite often you have, in the smaller blocks, you have, if someone doesn't pay their service charges for whatever reason, there's a shortfall, you can't pay for services, you can't pay energy bills, you can't pay contractors. A lot of freeholders quite regularly lend money to the service charge, there's no interest charge on that, it's just a fund to make sure that service charges and services can be provided. It's very much, as you said, you have an RMC structure now, which is quite similar. I think people all around this table will support Commonhold in some form. It's been around for a while, but the proposal are to sort of refresh it. There's not only difficulties in finding people willing to take part. I mean, recently with increased legislation on health and safety and liability, I mean, the Hackett report has got the freeholders the duty. You have a duty holder. Now, very few people who run this, they live there and run it in their spare time. In the last few months, we've had, as personal experience, had RMCs folding because no one's prepared to do it, so it reverts back to the freeholder. Now, without that sort of freeholder comfort blanket, who would do that? If there's a shortfall in the service charges because someone's not paying, who do you get the loan from? So there is advantages, and there's examples of what freeholders can do positively. I'm sure there is negative examples as well, but there is a big advantage to having a good freeholder that can step in and do these roles that more frequently residents, whether it be of Commonhold company or RMC, are not prepared to do anymore.
I mean, you've pointed out some of the positive aspects in terms of the role that freeholders and their managing agents actually undertake, but we've had evidence sessions and roundtables where leaseholders are saying, well, we can't even get hold of our freeholder or managing agent, and sometimes the remedial works forget actually getting undertaken. It's just weeks and months on end until somebody actually replies to us. So we've had very, very negative feedback to that effect. But I mean, let's move on to Commonhold. In your expert opinion of the market, Commonhold, which was first introduced in 2002, why do you think that hasn't actually taken off? Mr. Glen?
It was before my time as CEO, which is no real excuse, but it's not an area I'm familiar with. I would ask what sort of incentives were given to developers to sell to Commonhold, because as we saw from the first group, if you're selling something, there's another asset stream available, why would you forego the second stream for the sake of the first one if there's no advantage? So I don't know what the government gave to developers. And the second one, my background was in originally in investment banking, would be whether the banking community was up to speed with it, so that there were mortgages available to purchase on.
Yeah, no, you're very right there, because I think the House Builders Federation actually said that in terms of Commonhold properties, that there was a unsatisfactory in terms of the lenders were unwilling to lend. But Mr. Dyer, what do you think?
It's a great thing. It was a new system. Okay, it's operating around the world, but it was a new system to the UK. Both developers and lenders weren't used to it, and they went with the status quo. They went with the leasehold structure because it was an either-or opportunity, and that I think that's why it just never took off. Any new Commonhold, I mean, I think that all parties now are probably much more supportive, and it's to make it the route of choice rather than an option, if that's the way that it's seen.
Mr. Platt, would you be supportive of Commonhold, and why do you think it's not taken off?
I don't think there's any sort of perfect tenure of ownership. I mean, Commonhold presents it has its own advantages, and it presents its own set of challenges. And the leasehold system does that as well. But the leasehold system, works very well for the large majority of leaseholders. And I would concur with the other speakers that going with the status quo, which is a practice that many people understand, is possibly more preferable than going with something which isn't widely understood or is new.
So it's more a fear of the unknown, yeah, in that sense.
I think it could be, but I think the important thing is that consumers have choice, and it does present a choice. So.
And Mr. Silva, what are your opinions in terms of why Commonhold hasn't taken off?
I tend to agree with many of the comments that have gone before. And I think, as a general point, I think Commonhold can work. Mm-hmm. What I think where it is most effective is where there are small, mainly owner-occupied led developments. So in our portfolio, we directly manage 83,000 leaseholds. So over 40% of our leaseholds are owned by investors. They don't live in the blocks. They're not owner-occupiers. And frankly, they're quite comfortable with an independent freeholder looking after their investment and making sure that the block runs harmoniously. However, in many of the smaller blocks where you have willing participants who are happy to take over the stewardship role and make sure that everyone is working together in that block going forward, I think Commonhold can work. On the previous panel, we heard about the fact that we are living differently. Blocks of flats these days are very different to how they were 20 or 30 years ago. They're often several hundred units, complicated mechanical engineering infrastructure, combined heat and power plants, mixed tenure, commercial units, etc. And I think in that instance, it's just too complicated to expect people in their spare time to run their own affairs. And that's why I think giving the consumer choice by invigorating Commonhold, which actually, since it was enacted in 2002, there have been many moves to make resident-led management structures more amenable through we applaud the work the Law Commission is doing at the moment in the right to manage space, for example, which is kind of a bridge between the leasehold, freehold structure and the Commonhold. So broader choice is good, but I don't think Commonhold is the solution to all of the issues that the industry faces.
Just on that point, and you point out some examples of complications around managing a mixed use block, for example. But isn't that the way it works in other countries? The US has Commonhold, lots of other countries around the world seem to manage with Commonhold. So why can't we do it?
So you're correct. Lots of other jurisdictions do have a form of Commonhold, and all of those jurisdictions, without exception, have problems with those tenures. We're not suggesting for one moment, obviously, here today that there's no problem with leasehold freehold tenure, but what we are suggesting is we do, as an institutional-backed freeholder, provide an extra layer of it's a safety net to the longevity and the well-being of a block of flats.
What about the... Sorry, yes, please. Yeah.
You say, why don't we do it? I think we can do it. It's not there at the moment, but certainly as managing agents, and we could do it. I mean, it's not. I think the point is you could have other options, and the issue that is accepted around the other countries, and Australia's referred to, is there is this issue about people in the Commonhold structure, whether it, or the equivalent of the RMC structure here, that just aren't prepared to put their names forward, or they haven't got the time to do it. So that isn't an issue that I don't think there is a solution to. So maybe there's some way of making it easier so that people can get more involved. And it's the obligations and it's the legal obligations that go with that. Being a director of RMC does have legal obligations, and it's just people. A lot of people aren't prepared to take that legal responsibility of being a director of a company.
What about the mortgage lender's perspective on this? Sorry. Mortgage lender's perspective, anybody got any kind of insight into what mortgage lenders might think of properties that are bought through with a 10 years Commonhold?
We've looked at the UK Finance, the CML register of the top 20 lenders and their policies on lending against leasehold properties. The top 20 lenders represent over 90% of all mortgages in the UK. And about half of the lists will not lend against a Commonhold tenure, We heard on the previous session 2 weeks ago here that part of the reason probably is the fact that there aren't many common hold developments out there, therefore the product hasn't been developed by the lending community, and that's a perfectly valid perspective. However, all of the lenders will lend against the leasehold structure, and it has worked very well. One of the things I wanted to sort of point out on this is we hear in the media and in some of the engagements that we participate in about a number of 100,000 people trapped in unsellable, unmortgageable homes. It's very interesting. We've done a lot of analysis on our specific portfolio. As I mentioned, we directly manage 83,000 leaseholds. And we compared this year and last year with the amount of property transfers that we're required to do, or the amount of notices of mortgage that we're required to do, and the volumes are the same. We've had 157 people write into us to say, please can you vary the terms of my lease because I'm struggling to sell my house or remortgage it. And the significant vast majority of those are where there's a 10-yearly doubling provision in the lease, which we heard about in the last panel, and through the redress schemes that we're doing and others are doing, the leases are getting converted, the flats are selling, or they're getting remortgaged. So as an industry, I think we've coalesced very well together to say, okay, there is a wrong here, we all regret it, actually, let's fix it and let's move on. So we're not seeing the evidence that you've gathered that people are stuck in their homes to the volumes that we're talking about.
Dr. Glen, are you going to say anything?
Yes, just on common hold, what I wanted to say that is if we do go down that route, I think we have to go into it with our eyes wide open, because it would be unfair for a new system if we don't take lessons from what we can see currently. So, for example, I know it would be nice if we go to self-determination that everybody lives together in harmony. That is just not the case. I mean, you're pushing people together unnaturally, and they're not related, it's not a family, into a large block. So we have to accept that there will be disputes. We see that in RMCs at the moment. The fact that disputes don't occur is not the case. They do occur, and if anything, they are unfortunately worse than when you have a faceless landlord, because if I handed you over to a debt collection agency and I meet you in the foyer tomorrow, it's personal between you and I all of a sudden rather than somebody else. So we do need to protect common holders, if you like, from their own boards as well, so that there is an education there. And I can come back to what I said earlier about where you have directors. We do need to put in place a structure where we can teach those people what it means to be a director of a UK company with the liabilities that encounters, and what it means to be a director of a common hold company, or frankly at the moment an RMC company with a relevant legislation behind that.
Thank you, Mary.
In the previous panel, we discussed what the phrase onerous ground rent means. It'd be quite interested in exploring what you consider to be onerous ground rent terms, and how many of your leaseholders are affected by such terms.
Well, as discussed in the previous panel, we acknowledge that 10-year doublers are, and probably 15-year doublers, are wrong. They should be eliminated from the market. In our portfolio, personally, we have fewer than 400 such leases, and we are working with the affected leaseholders to offer them suitable alternatives.
In our portfolio, we have 4,165 what we define as onerous leases. An onerous lease is a lease that reviews more frequently, doubles more frequently than 20 years, so 15 years, 10 years, and so forth. We have 1,807 Taylor Wimpey 10-yearly doubling leases, and as at the 31st of October, we had 911 of those leaseholders who had either converted to an RPI-linked lease or were in the process of doing so. So it engaged with us. So how the Taylor Wimpey scheme works, for example, is because we as freeholder, and there are others that have these leases as well, we're the point of contact with their customer. They've moved on, they've sold the site out. So we actually engage with the leaseholders on a reasonably frequent basis, pertinent to their lease terms. So we've agreed a process where we've written to a number of the Taylor Wimpey customers, and there's other redress schemes we're party to as well, another redress scheme, and said, here's the option for you to convert your lease. This is how the process works, and there's a contribution that they can go off and procure their own legal services, so it's at zero cost to the leaseholder, which is quite right, and how it should be. We've been doing this for about a year, and we've written to a number of the leaseholders on more, 3 or 4 times. you can't force someone to engage with you. But as Jennie Daly said in the previous panel, it's an open-ended offer. So at some point in the future, when somebody wants to remortgage or sell their house and they find they can't because of the terms of their lease, then they can come to us. We can fix the matter. Going to the point about onerous leases and what therefore is an onerous lease. It was an interesting comment that you made to the house building community in the previous session about how much was ground rent 10 years ago and how much was it 20 years ago relative to today. So we've done some analysis on that, which I'm very happy to share with the committee. And starting ground rents in 2018 as a proportion of average wages or average house prices is lower than it was at every point in 1953, 1963, 1973. So in real terms, ground rents have not gone up as a starting ground rent. And we have the evidence. I'm very happy to share that with this committee. Yeah. So the concept of a payment of a £200 a year payment, which is the average ground rent in our portfolio, was the equivalent of £8.70 in 1953, where average house prices at the time were, £1,891 in the UK. Why did we pick 1953? That's the date when the Nationwide started its house price index. So that's as far back as we've got reliable information. So our view, and it's enshrined in the code of practice that I previously mentioned, is that an unfair lease or an onerous lease is a lease that is a fair lease is a lease that is basically 0.1% of the starting value of the property at the point when it's sold, with a minimum of £200, and that reviews over the long term to an inflation factor, and we do use RPI. So that's what we've tried to do, is say that is an acceptable lease, because actually it is in terms of wage comparison and house price comparison, it's lower than it's been.
So are all of your leases therefore compliant with that 0.1%?
The significant vast majority of them are. I'd need to check precise figures. I'd rather come back to you on that point.
What would you consider to be onerous?
Yeah, I mean, as a managing agent, we don't get involved in that. I mean, the managing agent's involvement might be to collect some ground rent on behalf of the landlord, but as such, we're independent between the landlord and the lessee. I've got some thoughts on the proposed cap, if you would like me to look at that. I think the £10 is a very, very strange number, to be quite honest. I'd be surprised if actually it costs less than £10 to raise that, if you think of the cost of administration, frankly, stamps and so forth. So I don't really see why you're putting in a cap of £10. If the premise is to get rid of the professional landlord, then make it a peppercorn. Why give them £10 and sort of say, well, take that and take it or leave it? I think there's a danger there that what you could have is that the professional landlord will say, well, £10 is not worth it, and you get the not so professional landlord who will extract funds from a leaseholder in a different way, would therefore be left to go into it. So I don't see that. The other thing about the ground rent is, again, if we go on to our current structure, we have RMCs who have a ground rent. Again, if I may take a personal example, when we enfranchised, we used to pay £100 ground rent. As an incentive for people to take part in enfranchisement, we set it to £10. That was the biggest mistake we made as a company, because the RMC cannot function on the £10 that it gets from each leaseholder. We have costs, so we have filing costs that are tiny, but there's administration costs for AGMs, there's D&O costs, and something which nobody likes to talk about, the extensive litigation costs when leaseholders disagree with their own RMC. The RMC has to somehow fund those, and how they've done it so far, they've had to sell their assets. They had a studio and they had to sell that, but that pot will disappear, and we can't go back, much though we'd like to.
If I might comment on the...
Would you mind if I just go to Mr.
No, of course. I mean, similar. I'm from a managed agent, so we're not collecting the ground rents. We collect them on behalf. I totally agree with, if you're going to set a ground rent, there's no point in having it at £10 because it's the cost to collecting that is more than the £10. You might as well go to a peppercorn. And again, it's exactly the same. Which is the question back to the first one, is what is the purpose of ground rents? I mean, on certain freeholders there is a purpose, and certain RMCs there is a purpose, because the money does go back into the stewardship of the building or the estate or whatever it may be. I think if you're going to, you either limit it or you don't. I don't see the point in having a £10 cap.
Thank you. Yes, sorry.
Yeah, the point I was going to make was that, and it comes back to what I said right at the start, when you invest in ground rents as a freeholder, you undertake the obligations that are written in the lease. We're there to preserve the long-term value of the building, but more importantly, to enforce the covenants and act as a safety net for residents. That is what people get for ground rent. Now, if that ground rent is capped or disappears, then it would be very easy to purchase a freehold, and anybody could do it. And they might not necessarily have the resources, the access to professional advice, or the access to funds to be able to fulfil the freeholder side of the bargain. And I'm not saying that means that freeholds would be acquired by disreputable individuals, but it does make it more possible.
So from Wallace's point of view and from Long Harbour, how much of your income, in terms of your companies, is generated by residential ground rent every year?
So in Wallace, the annual rent we receive is £11.2 million. All our ground rents are funded by pension funds based in the UK. So all the ground rent we receive is used to service the debt we have with those pension funds.
We have 160,000 in our wider portfolio of ground rents with an average rent of £200 per unit. So the ground rents that we collect is £32 million a year. All of the investments in the ground rent fund are from UK-based pension schemes and insurance companies, and all of that ground rent is delivered to those pension schemes so they can then pay their pensioners in their retirement.
What percentage of your business would that be? The 32 million, the 11.2?
Percentage
is that the entirety of your, in terms of your business, your company's business, income? Yeah.
Revenue, it is in our case probably about 55 to 60%.
So, to be clear, the £32 million is not Long Harbour revenue, it's revenue for the pension scheme. Right. So we run 3 funds. One is a residential ground rent fund. The second fund is a private rented sector build-to-rent fund, so we're one of the leading players in the emergence of building long-term accommodation for the private sector. And we also have a strategic land fund to buy land to bring forward. We work with Homes England at the moment in Northamptonshire to bring forward sites for sale. So the £32 million that I mentioned, which our sister company Homeground collects as the freehold servicing company on behalf of the pension funds, is not Long Harbour revenue.
Oh, right, okay. So Long Harbour revenue would be?
About £4 million a year.
Right, okay.
I'll come back to you on the precise number for that.
That's okay. So just then looking at the proposal for the £10 per annum cap on ground rents, you've objected to it, Long Harbour have objected to it. So why have you got concerns?
So I think it would result in, our starting position, as I mentioned, is that we think the leasehold system needs to be brought into the modern era, and we've proposed through the various consultations, whether that's through MHCLG or the Law Commission, our ideas on those issues and how to do that, culminating in a code of practice that actually forces good best practice on the various things that we do into the industry. We've also mentioned that I think there is space for a reinvigoration of common hold for what I would call appropriate sized developments. That all gives consumer choice. If you cap a ground rent at £10 going forward, then actually there is no economic incentive for us to invest in the various teams of professionals that work in our business that undertake the stewardship role. So I have an estates management team of very experienced people. Their job is effectively to police the managing agents, so not Nigel Glen's sort of membership, around all of our developments, and if they're not working properly on health and safety, fire risk assessments, audit, all of the stuff that a managing agent is supposed to do, we work with the residents to replace them. So we act as a long-term, a policeman, frankly. There's a significant investment for that. We can't charge. That's what we get in return for levying a reasonable ground rent. We have expert landlord and tenant lawyers in the business to give advice to people when they've got a dispute or when they want to do something with their lease in terms of changing their properties, whatever it might be. At a £10 ground rent, we're not going to invest in that. but it's as a consequence, because there's no economic return, and therefore the likes of ourselves and others, I'm sure, will withdraw from this sector, and it potentially will open up an opportunity for less professional individuals and or organisations to buy up these assets for whatever reason they want to do so. And I'll just clarify that in one respect. If you've got 100 flats in a block and the ground rent is £200 per flat, that's £20,000 a year of income. And we would pay probably in a normal market somewhere around about £600,000 to buy the freehold on that block. That block's worth £10 million, by the way, so we're 5-6% of the overall value. If the rent dropped to £10 a flat, you'd be able to buy that block, the freehold on that block, for £10,000. So, and as a consequence of that, somebody might do that just to have access to those 100 flats to see however else they can make money.
Okay, so it could be a money-earning scheme for somebody else, as opposed to something that would
a less professional organisation that hasn't got the resource to do all the things that we take our obligations under the lease. The lease is a contract where we have to do things, and we take those very seriously. We can only do that in return for a reasonable ground rent.
And we've heard that you've been getting in touch with some of your leaseholders about the terms and conditions, if you like. I wondered what other remedial action had been taken, perhaps by your business, Mr. Platt, to contact any leaseholders or to try to introduce voluntary remedial schemes.
Well, as I say, we have very few onerous leases in our portfolio, and in fact, all those onerous leases came about because we did a large corporate transaction probably about 4 or 5 months ago. So we don't have any 10-year doublers granted by Taylor Wimpey, for example. What we do is we get probably 50% of our queries into our office on a daily basis are from people asking for one aspect or another of the lease to be explained. And obviously a lot of people are coming to us and saying, would it be possible to vary the terms of our lease because we want to make it more attractive to lenders, or we want to sell? And in all those cases, we are endeavouring to find solutions for those people on a voluntary basis. It's not in our interest to have dissatisfied leaseholders. We'd like to think that they can turn to us for advice, which we freely give, and we are trying to help them as much as we can.
So, just looking at that, some freeholders are offering leaseholders, if we've heard, the opportunity to convert the doubling ground rent clauses to one that increases at the rate of RPI. Is it really a better deal for leaseholders to convert?
Absolutely, 100%.
Yes.
Otherwise they wouldn't be doing it.
Under the current level of RPI, I mean, I can remember RPI a little bit higher than 3%. So it depends on the level.
There's also technical. Under the current legislation, for which the Law Commission is doing some very good work on in terms of simplifying for enfranchisement, so extending your lease on a flat or buying the freehold on your house, the cost of a Taylor Wimpey 10-yearly doubling lease, we heard in the previous session of some extortionate amounts of money, a lease granted, say, 9 or 10 years ago with a £295 starting ground rent on a 250-year lease that doubles every 10 years for the first 5 years would cost about £35,000 to enfranchise, either extend or buy, depending if it's a flat or a house. If you convert it to RPI today, that same lease would cost about £6,500. And that's the way that the current valuation mechanisms work under the various acts, and so it's an immediate benefit to the leaseholder in that context of, £29,000.
Thank you. Just talking about enfranchisement. As well as fair ground rents, it's what we're trying to also achieve is a fair price for people to buy the freehold. I think Long Harbour did note in its submission to us that there are significant inaccuracies in the Law Commission's analysis of the current approach to valuation in its proposal for reform of the leasehold enfranchisement process. Could you expand on that?
Yeah, sure. There was a direction of travel paper, my phrase, that the Law Commission put out in July ahead of its formal consultation, which we're currently all working on. And that was specifically in relation to its thoughts at the time on where it wanted to get to make it to enfranchise houses. And there had 3 examples in there: House 1, House 2 and House 3. And then there were different lease terms around each particular house. And it looked a bit odd to myself and to colleagues and other investors, because we didn't really recognise in any meaningful way the terms of the terms set out in those examples. We did some analysis on our own portfolio to say, well, actually, how many of these leases do we have? So, to give you an example, one of them is the Taylor Wimpey. The House C is a Taylor Wimpey 10-yearly doubling lease granted with 241 and a half years left to run, and some examples about how they calculate the enfranchisement value. But certainly the way that it read was that that was the market norm, and there's lots of them out there. And as we've heard in evidence previously, we've estimated the size of the onerous lease market, so 10 and 15-year doublers, less than 15,000 units out of 4.2 million, so significantly less than 1% of all the leaseholds. So we were trying to establish from the Law Commission more precisely, and I wrote to Professor Hopkins about this, what the benefit of putting in what I would call a relatively extreme minor example of a house into that paper was going to do in the context of actually getting a really good informed debate about the wider market. The majority of leases in the market aren't onerous. The majority of leases in the market are, or a significant number of them are, inflation linked. The problem isn't actually the calculation so much as the process of how you actually do the enfranchisement. The current laws, the way the current law is structured, the regulations, it immediately creates a conflict between the leaseholder and the freeholder, especially if one pursues the statutory route, because the leaseholder is incentivised to go and find a valuer to value their lease as cheaply as possible. A freeholder arguably is incentivised, could be incentivised, we don't actually follow this practice, could be incentivised to actually put a higher price in as possible, and then you spend a whole load of time with lawyers and getting evidence that's very expensive.
Okay, one of the previous witnesses suggested a simple formula, a simple multiple. I mean, you mentioned before, Mr. Silva, that you gave the example of a block of, I think, 100 units, and you applied a 30 times multiple to the ground rent. So 30 times. So if I own a flat or a long leasehold of a flat in one of your blocks, I'm paying 200 quid ground rent a month. What would I expect to pay for the freehold?
It really depends on the pertinent.
Why does it depend? Because you bought it on a multiple as an investment. So why would it depend?
So I'm investing pension fund capital. That pension fund effectively has the opportunity to invest in ground rents or in other assets, and it is therefore a comparable rate of investment. That's the first thing. But that is dependent upon long-term interest rates and long-term inflation rates. So they're the only two variables. So in a high inflationary environment, where interest rates are high, then actually it's significantly cheaper to buy out your freehold, and that's the valuation system.
But we're trying to get to some fair position here, and I know there's two sides. If there's a kind of on the scales here, if the government's trying to make it cheaper for long leaseholds to enfranchise, it's going to make it. It can disadvantage freeholders, of course. It's part of the two sides of the same coin, isn't it? Yeah. But you said before, 30 times you applied, that was roughly the value of these things when you look for investment. It's 200 quid, 30 times 200 quid is 6,000 quid. Why can't I just buy that freehold from you?
That was just a simplified example.
Yeah, but it's pretty much what you would expect.
So we're advocating, and I mentioned that we proposed this to the Law Commission, and they've actually suggested it as an option. For long leases, so leases longer than 100 years, which is our main business, there should be some form of online calculator that everyone has access to, that's free or for a nominal fee. You input your pertinent lease details, and that gives a very transparent valuation. And the reason one would want to do that is typically on the long lease market, where people want to look for a lease extension, the legal fees and the valuation fees can cost the leaseholder £2,000. The lease extension itself might only be £3,000. So if you can eradicate all of that extra cost by having a transparent, fair point of reference to calculate these things, I think that's the way forward, and we've advocated that absolutely to the Law Commission.
Okay, there's got to be multiple at some point in terms of the times of the ground rent. Mr. Platt, could you answer that question? Well, what's a fair amount?
I think it's important to remember a couple of things. Firstly, when we invest in ground rents, we are investing pension fund money. And the reason that money gets invested with us is because of the long-term nature of the lease. We are all in favour of making the enfranchisement process simpler and more transparent.
And fairer and cheaper?
And fairer, but I think the point I would make is you can't take things that are complex and make them simple. And the point is that freeholders don't have a choice about whether to grant a lease extension or to enfranchise. It's something we're obliged to do by law. So all we ask in return for that is that we receive fair compensation such that the pension funds that have invested in the ground rents don't lose out. All in favour of making it as transparent as possible, and that's actually what we try to do with all our leaseholders who call our office and say, can I buy my freehold?
Okay, we've got, so took some evidence that somebody's got £100,000 flat with I think 67 years left to remain on that lease, where they've been costing £14,000 to buy the freehold. It sounds really unfair. 14% of that value of that property, for example. Yet there doesn't seem to be any logic to that level of the cost of that freehold compared to the cost of the ground rent, which is how when you purchase those freeholds on behalf of your investors, that's the calculation you made, a simple calculation in terms of the number, a multiple of that, of the revenue.
Can I come in? Sorry. I think the point in the example you just made is the difference between, you said, a 67-year lease. Now, there is value in a 67-year lease, so that person who bought it at 67 years wouldn't have paid the same purchase price as someone who bought a 200-year lease, because it's a lot shorter. So I think that
and we wouldn't have bought it on a simple multiple of the ground rent.
Because it's not valued on, when people buy those shorter...
And it's not valued like that, but why isn't it? Because you're buying them like that. You're buying them on a simple multiple.
No, we're not.
No, they're not. Not 67-year leases.
No, but we're talking. You could be talking much longer leases. That was an example of how unfair it is. But the reality is, you're buying these leases. And I get your point about charging a fair ground rent because that gives you incentive, an economic model. I get all that. And some of these things are complex. I get all that. But you've got to be fair to the people who bought the ground rent, who are living in those properties with a ground rent, and want to get out, and yet they're actually being screwed at a point in time they want to buy that freehold. That just can't be right. And doesn't. One of our witnesses, for example, one of the members of Parliament for the Commonhold and Leasehold APPG, was saying it should be 5 times your ground rent. Let's make it so easy for them, cheap for them, which I'm sure you think is very unfair. But unless we get to something that is really simple and easy and fair, you're going to lose this argument in a way that's really going to hit the sector very, very badly.
I think, for me, it's a good point you make, but I think if we look at the way properties are bought and sold, we heard a lot in the previous session about new build. But actually, the second-hand market has also got some systemic issues in it. And we welcomed last year the MHCLG consultation on simplifying the buying and selling process. And we look forward to what the government's going to bring forward in that context at some point. But here's the thing. Somebody decides that they want to go and buy a flat somewhere, and the first thing they'll do is they'll be sitting on their sofa at home, looking on their iPhone at local estate agents and thinking, I can afford a flat in that particular area, because the headline price seems to be within their price bracket. And they will then look at the pictures, they'll look at the EPC, they'll look at the floor plan, they'll go and visit the flat, and they'll think, great, I'll take it. It's not till several weeks later that actually they've realised they can't really afford to buy it. Not because the headline price, but the running costs of living there. Because they've never been told, until they're committing, emotionally at least, that the service charge is £1,500 a year, the ground rent is £250 a year, it's council tax G for whatever reason, and the council tax is £500 a year, and there's no money in the sinking fund, so next year they're going to have to top that up. That we see much more problems in terms of our customer service team dealing with distressed leaseholders, where actually they hadn't really understood what they were buying. And I think if one of the things that that we're keen to ensure that this overall leasehold reform agenda does, because as I've mentioned, we support the banning of houses, the eradication of onerous leases.
Here we'll talk about the cost of service charges later. Here we're talking about the cost of the freehold. And we can't get to a situation. It seems you were determined to maintain a position where this process is obscure, one-sided, expensive, complicated. We've got to somehow get away from that. And unless the sector comes up with something that is simpler, fairer and cheaper, then I think you might not have a sector, is the point.
Well, we would encourage the Law Commission to come up with something that's simpler and fairer and more transparent. But the current method for working out what the premium is payable on a lease extension is very detailed. It's clearly been thought about by minds that are far greater than mine, in huge amounts of detail, and is very clearly written into legislation. Now, the Law Commission is looking at ways of making that simpler and fairer. But I come back to the point that I made earlier. It's complex. It's around property transactions are the biggest transactions that individuals enter into in their lives, and we seek to make it as simple as we possibly can. But if you make it too simple, then there is a risk that you get into mis-selling areas, and you can't take something
I think we're in those areas already, to be honest.
Yeah, but you can't take something that is of its nature complex and make it simpler just for the sake of making it simple.
No, just make it fair, simple and fair.
Fair,
sorry.
yes.
We need to move on. Yes. We are short of time. I've just got a couple of final points we need to get on to.
Good afternoon. We've had a lot of evidence from leaseholders about service charges. They get concerned about a lack of transparency. They say sometimes they're excessive and poor value for money, and also when major works take place as well. So what do you do to make sure that when you charge for service charges and for major works that they are value for money and people aren't overcharged?
Shall I go into that? That's more a managing agent area. People do have recourse to challenge those. You have Section 19, you can go through the first tier tribunal. I think that's a separate question of whether people actually know about that, because certainly if I talk to friends in the social aspect, they have no idea that there is an ombudsman there should they wish to challenge it, that there's a first tier tribunal and so forth. So whether those are actually well enough known by people is a very interesting question. There are efforts being made to do that. So MHCLG is producing currently a leaflet on how to lease, and Armour, in association with quite a number of organisations, has produced, I think it's about 12 documents for leaseholders, trying to help them on various aspects like what is a lease, follow the money, common misconceptions and so forth. So there are some recourses there. So do people know about it is one question. Are they accessible and easy? So certainly my own personal experience of going to the FTTP was a non-contested case, and the first question the panel said was, where's your solicitor? And we're going, well, we don't need it, we're not contesting it. But the inference there was that we had to lawyer up beforehand, which puts it a little beyond the initial sort of £100 fee, because you're suddenly talking thousands of pounds. Something else you can look at is the regulation of managing agents, and I know that's something obviously that's being looked at the moment. So we as Armour, we have roughly half the managing agents in the country. We expect them to conform to our code of practice, which has transparency in there. We follow the RICS code, obviously. We send in, actually, it is RICS, to audit them every 3 years. We demand to see copies of accounts that they have prepared for service charges for their clients and so forth. So there are things that can be done, but that requires everybody to do that. Like I said, I can only speak for the half that Armour have who have self-regulated themselves.
I would exactly the same point. I mean, the two things that come out from leaseholders' question in their bills is transparency. So you have, like Armour have an organisation where people are members. You have to have regulation of managing agents, because we hold through independent banks large amounts of customers' money. So having a regulatory body has to be right. And I know the government are looking at that. Another point where there is anyone disputing it, the moment the FTT, they're the good body there to adjudicate that, but it is quite daunting. You're going into a panel if you're an individual leaseholder. There is a housing ombudsman, and maybe make more use of that as a sort of for small claims or small disputes, because it's not always about the money. It's about what you told me, or the timing, or there's lots of other issues around leasehold that aren't necessarily confrontational, but you maybe can't get an answer, you can't resolve it, and the housing ombudsman scheme, some form of that could be a good answer to it. But certainly visibility, I mean, from the budgeting process, there has to be a standard format of this is what a budget looks like, so it's clearly readable by absolutely this is what we do day in, day out, but it's what the people may see twice a year. So if you can have a budget that's simple, in plain English, tells every single heading, what it costs, what it's for, you have an audit account at the end of the year, so it's independently audited, which is what happens now. Again, those accounts go out that are clear and visible, and you can see, you say it's going to cost £100 at the start of the year, if it costs £150 at the end of the year on the audit, and you can have reasoning why there's a difference, because it's obviously not a science, it's an estimate a year before the time. So that's it's making it much more clearer with standardisation.
Do you charge percentage management fees on top?
No.
You don't?
It's a fixed fee. That's it.
And that's from the outset. That's absolutely clear. It's a fixed fee, 10 flats, whatever it is, and it's per unit.
Okay. Anything to add?
So, where we have management responsibility on blocks, we appoint managing agent. We do that from a panel of agents that we use, all of whom we have met. They sign up to our management agreement. They're required to report to us on a quarterly basis. We see their service charge budgets, we see the actual spend against that. It enables us to restrict the amount by which they increase their own fees year on year, and we work on the simple premise which they all understand, which is that if leaseholders are not happy with the standard of management that they get, and they come to us as freeholder and say we are not happy, we replace them.
Have you done that?
Yes.
Richard?
Very similar way of operating to Mick, although when we acquire a block from a developer, we're the last piece in the jigsaw. So the developer will get planning, build the blocks, appoint a managing agent, sell the flats, and then the freehold will be sold on to us or somebody else. So at the point where we become the freeholder of a block, there's already, all the flats have been sold out and the managing agent is incumbent. Our view is that we're not here to interfere with the peace and harmony of that block, as long as it is peaceful and it is harmonious. So we have a very broad range of managing agent relationships, over 100, and what we have is an estates management team that will effectively provide the rigour and oversight, the reporting, the health and safety, the fire risk assessment reporting to us, so that when the building safety team at MACLG ask us how many cladding problems we've got, of late, we're able to tell them pretty quickly. Exactly though the same way as Mick mentioned, if our residents, even on a no-fault basis, contact us and say we're dissatisfied with the service, we will, depending on where the block is, run a tender for 3 different managing agents to come in and pitch to the residents to run that block, and collaborate with the residents, give advice on what we think they should do, but then let the residents effectively be part of the decision-making process to replace the managing agent.
We've heard that high commission charges for insurance products are sometimes hidden within service charges. Do you think that should be prohibited?
Yes. I'll agree there. I think there's a basis for commission on insurance, because the question there is about who otherwise would deal with the claims. Because generally the management fee is independent of the insurance. So if the managing agent places it, they get a commission, and that compensates them for looking at the claims.
That be shown separately rather than
I think, well,
service charge.
it should be. I mean, according to Rich, what you have to do is disclose that you are receiving commission. So you have to say this within the with a letter adjoining the account.
I think the point is that a lot of managing agents don't take commission. I know it's the perception that residents think they do, but they certainly don't, and as a firm we don't. A lot of the commission, not so much commission, is hidden. You get lots of insurance placed through brokers, and the brokers deal with the claims handling process. So rather than do it charge at a point of claim, so if someone makes a claim, you have to generally get 3 quotes, 3 tenders, which the managing agent does. There's a cost implication to that. We don't charge that individual lessee for that individual customer for that. That's generally, and we don't charge a management fee for that because the broker deals with that. So that's potentially where that alleged commission is. But certainly there isn't insurance commission for most managing agents.
Okay, and another piece of evidence we got from people was their dissatisfaction with being charged permission fees. We had one witness who said that she was charged over £2,500 for permission to put a conservatory on the back of her house. I mean, that doesn't seem right, does it?
No, and it isn't right. And it's,
is there a justification for permission fees?
I think there is a justification for charging a fair fee where we provide a service. The lease is a legal document at the end of the day, and to the extent that we have to do work to provide a service, we would charge a reasonable fee to cover our costs. But
just to cover the costs, not
yes,
to...
but the level of fees you are talking about is not something that I recognise.
I think it's the in the example I give in blocks of flats where you have, if someone in the flat above you does work,
conservatory on the block of flats.
well, you couldn't have, but say for instance, quite a common one is changing, say, the kitchen design. So as managing agent, you have to go in, obviously acting for the freehold, to look at where that's kitchen, because you can't put kitchens above bedrooms and that type of thing. So you have to check that is correct. Wood flooring is another one, that when someone puts in a wood flooring, because the lease quite often says carpeting, that there's sand insulation, there's adequate sand, so someone's got to check that. You've got to have an approved specification, you have to sign it off with covenants in any consent that if that does cause a nuisance that you can still lay carpet on top. Now that's a costing, so that's not so much a fee as you say, but there's a reasonable cost that managing agents on behalf of freeholders would have to charge to be able to grant that consent in the first place.
And sorry to interrupt, I would make the point that we turn a lot of requests like that down. If somebody comes to us and says, I want to put wooden flooring in my apartment, as I alluded to earlier, we are there to enforce the covenants on the lease. So we are quite happy to say, no, that is not permissible under the terms of the lease.
But there's a difference, isn't there, between recovering a cost and charging a fee? So what we're talking about here is permission fees, so you don't see a role for those. A separate fee just for doing something.
Well, that is usually put in the lease that sometimes the landlord gets the charge. So again, alluding back to my personal circumstances, that's pretty much the only other stream of income that my RMC has, which is permission to sublet. So that is always a very hot topic, particularly with Airbnb, but very difficult to enforce because you don't really know that somebody is subletting. And then, as John says, permission to do something to the flat. So are you going to remove a structural wall? Are you going to, say, put a toilet above somebody's bathroom and so forth? And that requires the managing agent to go in, look, perhaps bring a surveyor and so forth. So the lease would usually say that a reasonable fee is required for that for compensation, and again you can contest that reasonable fee.
On to contesting issues, a lot of evidence that occasionally leaseholders do contest. They find it very difficult because the freeholder or the managing agent comes along with QCs and barristers, and they're trying to represent themselves, so it's a bit unequally weighted. Would you favour setting up a housing course as the government's now consulting on? Just a very quick response because we've got time. To try and simplify the process.
I would. The proposal that the government's put forward is actually not to do with this with leasehold in a sense. It's 43 pages, which is on about tenants and their residential landlords.
So you'd like to extend it into this area?
I would do, yes.
Okay, that's good. And if a leaseholder wins a case at tribunal now and gets the costs of the freeholder, costs awarded to the freeholder to have to pay, is it fair then that the leaseholders get charged those costs back in their service charge, which appears to be happening?
Under the certain circumstances, no, it wouldn't be. I mean, you can apply.
But it happens.
It does. You can apply for a Section 20C. And I certainly, if I took my landlord to court and won, and then found that I was paying his costs, I wouldn't be very happy.
You like it being banned then, that those could be charged back?
As long as it's fair, yes. Yeah.
Okay.
On the other side of the coin, if a leaseholder has been vexatious, I think the freeholder should have every right to sort of say, well, this has to stop.
Just finally, just trying to get to the point. Mr. Silva, you said that your company made, I think, in the end after payments back to the pension fund, £4 million from ground rents. How much of that money actually goes back to maintaining, improving the property and providing service to the leaseholders? Or is that your profit?
No, the profit is... from our ground rent management activities is £340,000 a year.
That's all you make a year.
So that's profit. The costs of running the freehold management business, so the estates management team, accounting, lawyers, customer service team.
You don't charge that the service charge then?
No. Is £3.6 million, and the pensioners from the money that we charge permission fees and consent fees for various things. Airbnb is a big problem at the moment. The wooden floor syndrome again. where we can charge reasonable fees. And reasonable, by the way, in this context, is governed by the law and are challengeable.
But those fees come to you on top of your ground rents?
So those fees are levied by, effectively levied under the lease to the landlord, and then the landlord pays us fees for managing, landlord companies pay us fees for managing their properties.
Right.
And so the turnover...
So that means if you could provide those figures to us.
Yeah, okay, I'll be happy to do that.
Mr Platt, your £11 million, how much do you actually make on the ground rents?
So as I said, our £11 million goes to pay the pension funds who
invested as a company.
So all our entire operation is covered, as Richard just alluded to, by consent fees and permission fees.
Perhaps you'll give us those figures.
I can give you those figures as well. Yes.
Thank you. Thank you very much, all of you, for coming to give evidence to the committee this afternoon. Thank you.